Selling options is one of the most well-known and used strategies in traditional finances. Every advanced trader or big firm, they use at some point options, and most commonly selling options, to generate synthetic dividends. And even though selling options can have win rates above 90%, as sometimes they can also, if not done right, they can break your portfolio. And since we're almost ready to launch the ability for you to sell options here on BitTopics, I want to go over some selling options and the risks that you can find when doing so. So stay tuned. Welcome back to another video. Today it's going to be about selling options. This for me is my favorite strategy. If you followed along on the channel before it was even called BitTopics, we have been selling options since the dawn of time of crypto options here in DeFi. So we started in 2022. It was, I think, with $400 that grew all the way to $2,000 in just a few months, I think 6 or 7 months, because there was a huge volatility. So premiums for us were very juicy, no leverage. Selling options, we were doing 4, sometimes 5% per week, which was ridiculous indeed, and those times will be always remembered. That portfolio grew some more, then it went down again with some losses, but also me taking money away from that portfolio to put in other strategies. But at the end of the day, we saw on these live streams that I did for a year, for a full year, maybe a little bit more, that selling options was a good income. And we had a huge community at the time about options trading and options in general. So now with us going back with BitTopics about options trading and options as passive income, we are bringing back selling options. Most likely I will go back again with a public portfolio where we sell our options weekly. But the point is that options in crypto, they act a little bit different, especially on settlement. So this is what we're going to be covering today. The difference between selling options on traditional finances, so with stocks, and the difference between selling options in DeFi. A huge difference most likely is the collateralization. So the collateral that you have, the margin that you have, mainly because most likely on the multitude of platforms that we have, you will find cash settlement and not asset settlement. Everton, what does that mean? Well, it is very simple. Let me give you an example with stock options and with crypto options. So with stock options, let's say we have GME. So we have GameStop here and we have 100 shares. Now that we have 100 shares, we have the opportunity to sell calls on these 100 shares. So you're going to sell calls. So at a strike above, so you're writing a call. Let's say GME is at 30. You sell a 60 call. What does it do? Well, you collect a premium from the buyer. And now there's two scenarios that can happen. Scenario number one, GME is below $60. So it is at $58. What happens? Well, two things. First of all, you keep the premium that you got when you wrote that option. So you sold that option and you collected $2. Well, those $2 are yours to keep, right? That is a premium. That is like synthetic dividends dripping into your wallet. What else happens? Well, the option expired worthless because it doesn't make sense for the buyer to exercise that option and buy those 100 shares of GME at 60 because he can go and buy at market price, which is 58. So he would be saving up these $2. So for him, it doesn't make sense to buy your shares because he can buy it at market price, which is $58. So that option expires worthless. It is gone. And third thing that happens, you had 100 shares that you bought at $30. So your average price on GME was 30 and now GME went up to 58. So you have capital gains. These $28 in difference is your profit. There's still unrealized profit because you haven't closed, you haven't sold that. You haven't sold the 100 shares. And most likely you don't want to sell these shares. So it is unrealized profit, okay? So you have unrealized profit on your shares. You have the premium, which lowers your average cost because technically you got that money for free, and the option expired worthless. Now, what happens if it goes above? This is scenario number two. Well, let's say it closes at 65. So at expiration, it closes at 65. Guess what? You have to sell 100 shares of GME to the buyer because that's what an option does. The option is an agreement for a future date between a buyer and a seller. So the buyer wants to buy your assets at a specific price at a specific time. This is exactly what's happening. So you will have to sell GME at $60 to this buyer. Will you have lost money? No, you just would have that impermanent loss, because if you had just sold this at market price, you would have been selling that for $65 a share. Instead, you would be selling it at $60 a share. So you still made $30 per share in profit because you had it at 30. Remember, you bought it at 30 and now you're selling at 60. So $30 gain per share. But you could have sold that at 65, but now you still get to keep the premium. So you have the $30 in profit per share plus the premium that you collected. So that is your total P&L. So that is your total profit. Guess what? This is realized profit because you did end up selling these shares. So you sold these shares and you have cash now. Now you have cash. You don't have the underlying asset anymore. You just have cash. The option was assigned and you kept the premium. So at the end of the day, scenario one, you still have the assets and you have premium. Scenario number two, you now have cash and you have premium. Both of these are positive because again, once you have cash, you can do two things. You can wait for GME to go back down below 60, whatever price you feel like it is worth buying, and you buy more and then you sell more calls. Or another thing that you can be doing is for you to sell puts instead. So what you're going to do, you're going to start selling puts. Let's say right now GME is at 65, you sell puts at 58. So you're going to be collecting premium, and in case GME closes below 58, you're obligated to buy these 100 shares at $58. So now you're going back to square one at having the underlying asset and you can sell calls again. This is called the wheel strategy. But this is not as it is for crypto. Well, for crypto, the majority of DeFi protocols or options protocols, they can be centralized as well. They offer cash settlements, meaning that you don't have the underlying asset as we did for stock options. You just have the equivalent in cash. So on step one, you only have cash. You don't have Bitcoin, for example. These are called naked option, or at least a type of naked options, because you can see them as cash secured calls and cash secured puts. But these bring in a lot of risk if you compare that to traditional options. Well, why? Let me explain that to you. So imagine you have $64,000. This is the equivalent of one Bitcoin right now. Bitcoin is at 64,300. So let's say it is at 64. So you have 64K and you're going to use that to sell Bitcoin calls. So let's visualize it here. This blue line that you see is the strike that you're selling. So you have $64,000 and you sell a $70,000 call. So what you did, you just sold a call for a premium. But guess what? You don't have a Bitcoin. You have the equivalent of one Bitcoin in USDT, USDC, whatever stablecoin it is. Well, now what can happen is two scenarios, just like with stock options. But scenario number one, Bitcoin closes below 70K. So Bitcoin right now is right here. It's going to do a little bit of this, a little bit of that, and closes right here. It closes at 67. What happens? You keep the premium and you get back your collateral. So you have the 64 plus the premium, and that's your new amount. That right now is all already cash settled. So you have cash on both hands. You have your collateral, which is in cash, and you have your premium, which is in cash as well. So you don't have Bitcoin. You never had Bitcoin in this strategy. Most of these protocols use cash settlement. We traders would like to have Bitcoin settlement or underlying asset settlements, just like for stocks. Why? Because that allows for a lot of cool things. The first one is to lower your average price. So if you have Bitcoin, you can sell calls on Bitcoin and you can sell puts on Bitcoin, and the premium that you collect and you keep collecting month over month will be free money to deduct from the price that you pay for Bitcoin. So that's going to lower your average price for Bitcoin, for Ethereum, for whatever other coin that you can trade. And we do see a few protocols, and that would be best case scenario, or at least the opportunity for the user to choose if they want to go naked or if they want to go with the underlying asset. That would be the best case scenario. So in scenario number one, you kept your cash and you kept your premium. What happens if Bitcoin actually closes above 70K? So we delete this right here, and on scenario number two, Bitcoin stops, goes down, goes up, and then it closes at $73,000. So what happens here? Well, here you lost the money. Let me actually repeat. Here you lost your money. Well, a lot of people will be shocked, but why did I lose money? On stock options, I just made less money than I would have if I had held the asset or if I had just sold the asset at market price. Well, guess what? Here, it doesn't work this way, because here you don't have an underlying asset to sell to the buyer. Here you have cash that you have to pass on to the buyer. So you have that 64K. Guess what? now that it is above 73, the buyer gets the 64K. So that money gets passed on. It is pretty much just like getting liquidated and wiped out of the market. And this is where a lot of people get mistaken, because they think it is going to apply just like the stock options did. But because you don't have the underlying asset, you're having to cover your losses with the collateral itself. And this is where it sucks. So why do we even have naked options? Well, first of all, it is the simplicity. It is way better to have cash settlements for everyone than to have underlying asset. Of course, for the sellers, it would be best to have underlying asset settlement, but for everyone else, most of the time it makes sense to be cash settled. So that is reason number one. And reason number two, the only positive thing that I can think of on having cash settlement for crypto is, let's say a protocol offers a meme coin for you to sell options on. So we have Doge, for example, but you, like me, you don't really care about holding or having any meme coins, but you know you can make a lot of income, passive income out of this with calls. So what you can do is you can be trading, you can be selling calls on Doge. I think I said Doge or Shiba, whatever it is. You can be selling calls on that without even having that asset, because you think that asset's lame, but because it has good volatility, you can be making money out of it. So that is the only good scenario that I can think of. But again, most of the time for sellers, it is a bad scenario. How do you can fix it? Well, you can limit your losses, for example, by using spreads, which we offer here on Bitopics. On Bitopics here, if you go, for example, for the Earn tab, what you can see is these expiration. So you pick that just like you would pick to sell an option. And here you can limit your loss if you were to compare that to selling naked options. So selling cash settled options, because here you can have a limited maximum loss, but also at a cost of a maximum profit. But that being said, if you're doing just naked options, it makes more sense for you to go with the spreads. And here we made spreads very, very simple. For you, it seems like you're just selling an option, but what is actually happening, two options are being opened when you open a position, because again, it is a vertical spread. If you don't know what it is, we have videos talking about vertical spreads here in the channel, and they have limited losses as well. So maybe the 3-4% that you can be looking at an option by selling a call, you can be looking at a little bit more with little less capital here. So you could be looking at a third of the capital to make the same yield or even more yield, since it is a spread. Spreads are usually very, very good for this. That being said, naked options are not just an evil. So it is good for you to have the opportunity to sell options. It is great. And of course, when they come here to Bitopics, we're going to be trading those together. But the thing is, we always would like to see improvement on where we are. So best case scenario, once we fixed everything, it is a little bit hard because we need margin. We have a lot of behind the scenes work, back end work to make everything function perfectly. But once we have everything that, and we maybe can have underlying asset settlement, meaning that you need to have Bitcoin to sell a Bitcoin call, or you need to have Ethereum to sell an Ethereum call, they'll be great, because then you could be collecting Ethereum or you could be collecting Bitcoin instead of cash, because then you can assign in Bitcoin or assign in Ethereum, and that could be better entry for you, that could be better prices, that could be lowering your medium or average price. There's a lot of good things that you can do when you have both. But I think having both makes for the best modularity for the user to decide if he wants to go naked, if he wants to go cash settled, or if he wants to go with margin, no margin, underlying asset. All of these makes for a great experience for the user, which is you. If you want to check out Bitopics, scroll down below and check out the first link in the description. And if you are already someone who watched my channel before, like we see a lot of people here from a while back, we see Crypto Ricardo, good friend of mine. We see RM123 as well. I saw him the other day. So a lot of faces that have been trading for us for a while now, and then they can share in the comments how successful it is, how good it is to sell options in DeFi. So I hope you guys enjoyed this video. If you did, don't forget to like, subscribe, and turn on notifications. And if you can share this to a friend who is skeptical or hasn't started yet trading options, this video might help him understand a little bit the pros and cons, the risks of selling option, and we can have a new member on board. So thank you so much, and I'll catch you in the next video. Peace.